And what 1984 is, Big Brother is watching. And the big concern with Fed now, or the Fed coin, the central bank digital currency, CBDC, is that we lose our privacy. Hello, Robert Kiyosaki, Rich Dad Radio Show. The good news and bad news about money, or whatever is money today, because we don't know what it is anymore. And it's a very, very important show. I think all of our shows are important. But there's a lot of rumor about the Fed coin and CBDC, central bank digital currency. There's also Bitcoin and now Fed now. So the question is, what is money and what does it mean? And anytime there's a big change, there's always the rumor goes up and speculation and panic and all this. And it's for good reason. Throughout history, who controls the money controls the world. And since 1944, America has controlled the money, with the U.S. dollar being the reserve currency of the world, which caused America to boom, but it also caused many problems. And when we lose our reserve currency status, which started in 1944, the question is, what happens after that? So our guest today is George Gammon. Welcome back to the Rich Dad Radio Show.
Well, thanks for having me, buddy. It's always awesome to talk.
Thank you. So what do you know about this Fed coin and CBDCs and Bitcoin and crypto and all this? What does it mean to the average mom and pop out there? What's going to happen?
Well, I think the first thing people need to realize is just going back to what you're saying about Bretton Woods, when you stated that the United States was then in control of the money. To a certain degree, that's true. But now I would argue it's more so the banks. The banks control the money, and more specifically, the banks outside of the United States.
Amen. That's Jeff Snyder. It's called the euro dollar and the euro yen and the euro peso and the shadow banking system. Well, but Gerald Celente doesn't call them banks. He calls them banksters.
That's a good term. But the reason I start with that is so people realize that 95% of the dollars in the world were created by lending them into existence. So most people have this idea that dollars are just kind of a green piece of paper, and you take your green pieces of paper that you digitally get with your paycheck and deposit it at the bank, and then the bank kind of puts that in a vault and stores it for you until you need it. But what they need to understand is, again, 95% of those dollars were not green pieces of paper. They were lent into existence by a bank extending credit, and therefore those dollars are a liability of a bank. Right. So if your listeners have an account with Wells Fargo or Chase, B of A, something like that, then, and what the depositors found out very quickly with Silicon Valley Bank, by the way, is that those dollars, which they considered assets, you got $100,000 in your account, that's your asset, but that was a liability of a bank. They weren't putting it in a vault. They were actually taking your money and they were lending it out, and you just had to trust that that bank was going to pay you back. So why I want to start there is because I have really been pounding the table that the thing people should really be worried about as far as a central bank digital currency isn't necessarily a competing currency to the dollar. It's not necessarily a Fed coin or the Janet Yellen coming out and saying, okay, now we're going to start using this CBDC. So whether you guys like it or not, we're just going to force you guys to use this and ban cash. But what a CBDC really is, when you look at the mechanics and the financial plumbing, it's just the individual taking their account that they now have with Wells Fargo, that's a liability of Wells Fargo, and simply moving it to the Federal Reserve. This is what we really need to push back against, assuming that you value freedom, liberty, free market capitalism, and especially your privacy, because all those Orwellian things that we have heard of that we don't want to come to fruition, those cannot happen unless your dollars are on the Fed's balance sheet, or said another way, that your dollars are a liability of the Federal Reserve, that your bank goes from being Wells Fargo to Jerome Powell and the FOMC. And fortunately, the good news is that is currently illegal. The Fed admits that it is illegal for them to have an account for an individual in the real economy. So as long as we make sure that they don't change that law and they don't break that law, it's going to be very difficult, if not impossible, for them to implement what is really a central bank digital currency. And there's a couple other components that would be necessary, but I'll just stop right there.
Yeah, because you've gone over the head of most people right now, including mine. I like pictures. Like what you have here is what's going on. You have here, this is your savings.
Yes.
Your asset. So you have $1 million or 100,000. That's your asset. But the moment you put it in the bank, it becomes the bank's liability.
Right. Yeah, I'm just looking at that paper.
Banks,
exactly right.
The banksters have to then take your money and they have to buy another type of asset to make sure they can pay you the interest on your savings here. And what happened with Silicon Valley Bank, what they put their money into was all these debts and all these things. And the bank's assets went bad. And that's when the runs of the banks start. People want their savings back.
That's correct. And
that's where we're in serious, serious trouble right now. And then when you talk about Orwellian, George Orwell wrote 1984. And what 1984 is, Big Brother is watching. And the big concern with Fed now, or the Fed coin, the central bank digital currency, CBDC, is that we lose our privacy. That they'll track us. They'll track every move because they'll know everything we're spending money on, what we spend it on, who we give it to, and all this. So it becomes George Orwell's 1984. Big Brother will watch you via our money. And that's the problem with central bank CBDC, central bank digital currency, or the Fed coin.
Yeah, well, that's one of the many problems, Robert.
Yeah, but people like me panic. I said, oh my God, they're going to track me. I don't want them to know when I'm spending my money. It's none of their business. But now with, blockchain and all this, they can track anything they want. So our privacy goes, and that's why it's when George Gammon says Orwellian, he's talking about 1984, Big Brother's going to watch you. That's where we're at.
Yeah, and it just goes back to that common phrase that we heard so much during 2020 and 2021, that people often in a crisis situation are willing to sacrifice their freedom for the perception of safety and security. And so you were talking.
Hold on. The perception of freedom and security.
That's a very important word.
Yeah, because as we're talking today, people are finally waking up to what Gerald Celente says. The banksters, what bank is safe right now? And we have things like the FDIC, Federal Deposit Insurance Corporation, that's supposed to protect you up to $250,000. So if you have $250,000 of your savings, supposedly the FDIC will protect you. But what happened was Silicon Valley Bank, it was in the billions over here. And that's when Jerome Powell, the Fed, and the FDIC got together and said, we have to bail these guys out.
Yeah.
And that's called the moral hazard there. The moral hazard is that's the end of capitalism. How do you bail out the rich? And a lot of those rich guys are the Silicon Valley guys that took down Trump, in my opinion. I can't prove that. But this whole thing is, the scientific term is one big effing mess.
Yeah, and you can see that. Oh, go ahead.
The trust has gone out.
But that's the opportunity for the central planners and the authoritarians, right. Robert.
Right.
You see, you have this banking crisis.
But hang on. When George says central planners, he's talking about Marxism. Mm-hmm. Central bank. And that's what, our founding fathers, that was Thomas Jefferson. He says, we got to stay away from that one. Because, if we go to a central bank, he said, our children will wake up homeless. And look at homelessness today is going through the roof. This stuff has been going on since the 1700s. And it's what George is talking about is now happening now. And everybody can sort of see it. And that's why the FDIC are panicking, because if you have like $250,000, let's say you have $1 million, Does that mean you only get $750,000 back if you lose everything? Or is the FDIC, the Federal Deposit Insurance Corporation, going to bail out your $1 million too? And that's the uncertainty, because money is confidence, and our confidence is gone today.
Yeah, very well said. And I'd like to point out that the FDIC, they don't have that much in their coffers. Let's say they've got at the most 200 billion, probably a lot less now with Silicon Valley Bank and Signature. But let's keep in mind for the viewers and listeners that there's roughly $18 trillion in deposits in the United States. So that math doesn't work when the FDIC only has 200 billion.
And George, can we step back to Jeff Snyder? He talks about the euro dollar. The euro dollar means European dollar. It's dollars outside of America, which are then creating more money outside of America.
Right.
There's trillions of euro dollars as well as US dollars. This thing's a big mess. It's like the big house of cards is set to come down.
Yeah. And again, that's my concern, that the central planners, the Marxists, if you will, are going to leverage that crisis situation. You know, their motto is you never let a good crisis go to waste.
Correct.
So if we continue to see problems in the banking system that exceed the FDIC's ability to patch up the holes, then of course they come in on their white horse saying, well, we've got the solution. All you have to do is take your dollars from these unsafe commercial banks and just move them to the safest bank in the world, which is the Federal Reserve, which is the central bank. And people see that as, oh, that little bit, that perceived security and safety, they give up their freedom. But what they don't realize is they're doing a deal with the devil.
I went to military school. We don't say it so politely. It says it's time to bend over and pick up the soap. You know what I mean? You don't know where it's going to come from anymore.
Right.
Because the cash is trash right now. You know, and Rich Dad Poor Dad says savers are losers. The rich don't work for money and all these things. And we're talking about how the entrepreneurs like me, I stay out of paper, anything that's printed. So, you know, took a company public. I own the paper. I mean, you know, the IPO produces the shares, but I own the shares. I don't want to buy somebody else's shares with somebody else's company, because that's what another term is called counterparty risk. You know,
that's right.
It's in control of somebody else, not me. It kind of bugs me. So when George went up, George was at our 3-day and he went into inverse yield curves. Couple of minds shifted gears. What the hell is he talking about? And George very simply says, we're into it right now. It's not tomorrow. It's not maybe. It's right now.
Well, I use the example of a tsunami.
Yeah.
I think it paints a perfect mental picture for people, because we know that a tsunami, when it's way out at sea, although you have this powerful force that's coming at land at, let's say, 100, 200 miles per hour, you can't see it. They could go right under a boat and, you know, they wouldn't even know. But what happens there are these detection buoys that advanced countries have. They're, you know, 100 miles out off of shore, let's just say. And that detection buoy can feel that it can sense that force coming toward the shore. And so then it sends a signal up to a satellite, and that satellite signals the scientists that are on the shore to go ahead and warn the general public. Well, they don't know exactly when it's going to hit. They don't know where it's going to hit or how it's going to play out, but they just know this thing is headed at you at 100 miles per hour. That is basically what the yield curve does for us.
Okay, so what we're saying, ladies and gentlemen, it's here. And, you know, and George said it aptly at our 3-day. He says, the crack in the foundation is now showing. Mm-hmm. Crack is shown in how fake this whole system is, this whole monetary system that just creates money out of nothing. And when America started paying its bills just by creating money out of nothing, it's going to come back. And right now, and that's what Andy Schechner is talking about, the BRICS nations: Brazil, Russia, India, China, South Africa, Saudi Arabia, Mexico, Japan, possibly New Zealand and Australia, the American empire is going down. And that means the dollar is possibly going down. So, ladies and gentlemen, that's why what George is saying is crucial. And my job is to keep it as simple as possible. But the thing when George says Orwellian, they're talking about 1984. We're here right now. So we come back, we're going more into what's going to happen now. We'll be right back.
Have you heard about the expanding influence of BRICS, Brazil, Russia, India, China, and South Africa, and its potential to severely impact the US dollar by possibly creating a new world currency? Even JP Morgan said, and I'm paraphrasing, the impact of BRICS would most likely be felt here in the US, where moving away from the dollar would cause our financial assets like our IRAs and 401ks to lose value. We agree with JP Morgan and many others. Now's the time to position yourself for stability, security, and wealth protection. So take it from Robert and me, whether you're a seasoned investor or just starting, we believe that gold should be a part of everyone's portfolio. Seize the opportunity to ensure your financial future with gold and do it with one of the best in the industry, Allegiance Gold. Allegiance Gold has done things right from the beginning, having earned 5 stars with TrustLink and an A+ with the Better Business Bureau. Allegiance Gold can help protect your IRA or 401k with physical gold and silver, or you can have it delivered securely to your doorstep. Get up to $5,000 in free silver on a qualifying investment when you visit protectwithrobert.com today. Or you can call 844-3-ROBERT. That's 844-3-ROBERT. Hi, everyone. I'm Kim Kiyosaki. Thank you for being with us today. As CEO and co-founder of the Rich Dad Company, I can assure you, Robert and I are both dedicated to our Rich Dad mission to elevate the financial well-being of humanity. And you are the humanity. We truly want you to succeed. When you succeed, we all succeed, and our mission grows stronger. With that in mind, I'm excited to extend a personal invitation to you to elevate your financial well-being by attending our exclusive free online wealth building event hosted by Robert. You'll learn what to focus on first to start increasing your cash flow immediately. You can reserve your seat right now by going to richdadonline.com. Just go to richdadonline.com. The event is 100% free and will help you achieve your financial goals.
Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about money. And this looks like all bad news, but it's good news if you know what's coming. And something big is on its way. And let me show you a really simple picture. By now, everybody's heard of Silicon Valley Bank, Silicon Valley, SVB, and FTX, and all those other characters running around out there.
I just call it Stupid Valley Bank.
Robert,
that's the easiest way to remember it.
And I also call it foolish gold and foolish silver and all that other stuff. And, all these REITs, real estate investment trusts, it's just foolish to me. I won't touch that stuff because it's all fake. It's all fake. But anyway, this is kind of the start of our problems here one more time. So you save money and you put it in the bank, but your money is your asset, but it becomes the bank's liability. Just remind you of that. And what happened was then the banks have to buy something, the banksters, they have to buy something to cover the interest they're paying you here. And so they bought all these T-bills and this and that and all this crap, I thought. And then all of a sudden people realized the bank couldn't cover it all. And that's when the savers start running back to the bank, give me my savings back. And that was what the FDIC, Federal Deposit Insurance Corporation, was for, to make sure that they would give you money back. But these banks had created so many fake assets out here, they couldn't cover it. And so that's when Janet Yellen, who's head of the Treasury, also she used to be head of the Fed. And the Fed says, we'll guarantee all these loans. In other words, the Fed and the Federal Reserve Bank, which is not really a bank, and the U.S. Treasury says, we'll back up anybody right now. And that's when George was at our 3-day here in Scottsdale. And he says, the crack in the foundation has been seen, and they're trying to fill that crack up. Anyway, so it's a really frightening time, but the average person is completely clueless because they can't see this. So that's why George had showed the group on the inverse yield curves, which blew my brain apart, about what's going on. And so a picture sometimes worth 10 million words. So George, show this picture you showed us at the 3-day in Scottsdale.
Yes, and this is the tsunami warning system that we were referring to. But probably more importantly, if we switch to that chart of the inverted yield curve, and what we can see is the 2-year Treasury yield is higher than the 10-year. So just right off the bat, if I ask you, Robert, if you're going to lend someone money for 30 years, are you going to charge them a higher or lower interest rate than if you lend them money for 3 weeks? Well, the answer is going to be a lot higher interest rate because there's a lot more risk.
For the longer term.
That's right. So when we see the short-term interest rates higher than the long-term interest rates, that's that. Let's say it. The economic.
Yeah, it's just a bad sign.
That's the tsunami, the economic tsunami warning signal,
right?
Saying, hey, something is really, really wrong. And most likely we're going to have a significant recession or depression in the near future. Now, what does that mean? How do you time this? Well, what we've seen going all the way back to 1950.
Oh, wait, George, it's already hit. That was Silicon Valley Bank and Deutsche Bank and Credit Suisse. It's already hit.
Yeah, this is just the first cracks that you see in the system, but the dam hasn't yet broken.
Correct.
And so that's what the yield curve is telling us. So when the dam breaks, how do we time that? How do we know when that's going to happen, assuming that Silicon Valley Bank is just the first crack? Well,
what do they call it? The canary in the coal mine?
The canary in the coal mine. You got it. It's just this huge red flag.
Silicon Valley Bank. But then Credit Suisse went down. Deutsche Bank and the Bank of Japan's next. This is a global crash.
Yeah, you don't know which bank is next, but there's a lot of the whole global economy is very vulnerable. And this is what that yield curve is telling us. So what people really need to be cognizant of is when the 2-year yield goes back down below the 10-year, because when the yield curve is no longer inverted, that's when we usually get the recession or economic depression.
Yeah, this is historically. So all people say, oh, good, the 2-year went down below the 10-year. And everybody thinks that's good news. But that's the re-inversion and all this stuff, but it's not good news for the average person.
Yeah, that means that the tsunami is not 100 miles away. That means that the tsunami is 100 feet away. Right.
And I went to school to be a merchant seaman, so I traveled the oceans, and these swells don't bother the ship. I went through several tsunamis and all this stuff at sea over the years I was out there. It didn't bother the ship, but when it hit land, boom. So explain this buoy system and all that stuff, because that's what I studied as a student years and years ago at the U.S. Merchant Marine Academy in New York.
There's direct parallels between how advanced countries know if a tsunami is going to hit their shores and the actual yield curve predicting a financial tsunami. Right. And so they have these buoys like 100 miles. I don't know how far are they out, but let's say they're 200-300 miles offshore. These underwater buoys can feel or can sense that pressure. Swell, that's underneath the actual surface of the water. And they send a signal to satellites, which send them to the scientists, and the scientists can warn the people that are on the shore, hey, you need to get out of Dodge. So the financial economic version of that system is the yield curve. So when the yield curve inverts, meaning the yield on the 2-year is higher than the 10-year, that's the financial system warning us that, hey, guys, there's a big problem, and this financial tsunami is coming at the shore very, very quickly. So it's not there yet, but you're going to start seeing the cracks, such as Silicon Valley Bank, Signature, Credit Suisse. So now, as prudent investors, or just the average Joe and Jane trying to protect your financial security, what else is it telling me? What else, or what other signals or warning red flags can I extract from it? Well, the next thing that you need to look for is the curve no longer being inverted, which would mean the 2-year Treasury yield going back down below the 10-year. Because if you go back to 1950, you see that 9 times out of 10, that tsunami, that financial economic tsunami, hits the shore after the curve is no longer inverted. So that's what people really need to focus on now.
So let me ask this question. When somebody says the Fed pivots, does that have anything to do with the inversions and all this other stuff? Or
Absolutely, it does.
What does Fed
Absolutely, it does.
What does Fed pivot mean?
When the Fed, so right now the Fed is in a tightening cycle.
Raising
They're raising interest rates. That's right. So the Fed pivot refers to when the Fed starts actually lowering rates. And so usually when you see the curve, we'll call it uninvert, if that's a word, it's a result of the Fed actually dropping rates and dropping rates very, very quickly.
And so people will celebrate this. Oh, the inflation's over. Everything's happy days are here again. Is that what you're saying?
Exactly. You nailed it. And then the Fed's going to drop rates, and they're going to say to themselves, "Oh, this is fantastic. The Fed came in, they saved the day. They're dropping rates back down to zero. We've got nothing to worry about." Yeah. They're going to, if we were going to have a recession, now we're not. And then that's when that wave is going to impact the shore. And for those people who aren't prepared, that's when they're going to get financially destroyed.
So let me just say this much: that chart you showed with the buoy, that's NOAA, National Oceanic, But I've actually gone through 2 tsunamis, 57 and 1960. I was growing up in Hilo, Hawaii, and my science fair project was to build a model of the bay, Hilo Bay in Hawaii. And it showed exactly what happened when a wave hit. And the wave would hit the island of Hawaii and bounce along. But there was a natural harbor, the Hilo Harbor, which is why there was a town in Hilo. This big bay was there, and it was like this big funnel. The bloody tsunami and went straight up, bounced along the walls of the island, and came straight into the bay, destroyed the town. So I've had classmates wiped out, killed, disappeared, everything. And so what George is saying here is more than just financial. I've actually experienced the real thing, 57 and 1960, when I was living in Hilo, Hawaii. But Hilo is like this big, hey, come mess with me, just wipes them out. And then classmates disappear. So my poor dad was in charge of the reconstruction of Hilo. And my rich dad was on the other side of my poor dad. And there was this big fight after the 1960s tsunami hit, because all the capitalists wanted to rebuild the town. And my dad, poor dad, says, do not build where the tsunami is going to hit. So here was the best property in all of town. My poor dad condemned it. My rich dad went nuts. And so that was a battle between rich dad and poor dad. So, this is like personal to me, because I still remember as a Boy Scout, we had to go down there and clean up the mess, and saw bodies being taken out and all this. And I didn't see any of my classmates, but I had 3 classmates not make it. So this is what George is talking about, that NOAA, that buoy system, is I know exactly what that thing does. And like I said, I went to the Merchant Marine Academy in New York, and at sea, it doesn't bother you. It's just this big swell. But when it hits the shore, it just destroys it. And so what George was saying at our 3-day, it's hitting us now. That was central. The Silicon Valley Bank was the first casualty. And then Swiss Credit Suisse and Deutsche Bank and Nexus Bank of Japan.
Yeah. And again, there's just so many incredible parallels just as that I think about as you tell that story. How many people that when this curve has been inverted for probably 9 months, how many people in the mainstream media are saying, oh, don't even worry don't focus on it. The unemployment rate is low. The economy's on fire. Everything's fine. And it's just like those people that are in Hilo that aren't paying attention to the warning system, saying, oh, Robert, you're just fear mongering. You're sitting there talking about a tsunami that's never going to hit. We're protected here until the thing actually hits and they get wiped out.
Yeah. Can I tell you something even more silly about that? Before the wave hits Hilo, it has to suck all the water out of the bay.
Yeah. Right.
And what happens then, Sarah, all these fish are jumping around out on the because all the water's gone, and all the yo-yos go running out to catch the fish,
Mm-hmm.
and then the wave hits them, tears everything apart. People die. I mean, it's just I grew up with all this going. Why would somebody go there? You can go to the store and buy some fish, but just free fish. And that's what George is saying. When the Fed pivots, everybody can say, oh, happy days are here again. Don't go chasing the free fish.
Yeah, Robert hit the nail on the head. That's another great analogy and parallel is when you're talking about that water going out and the people think that's free fish, that's the Fed dropping rates. Because when the Fed drops rates, most likely people are going to be, oh, great, that's free fish. I'm going to go buy stocks.
Yeah, exactly.
I'm going to buy all these risk assets and get rich. And then that's when the tsunami takes them out.
Yeah, I'm going to buy more real estate because the interest rates are down.
Exactly.
And they're going to rush back in, and the free fish is going to kill them.
Yeah.
So, George, how would somebody prepare for all this right now? I mean, Kenny and I, McElroy, we use 100% debt. Mm-hmm. And we're 100% debt because, the dollar is debt. If you can understand that, it only exists because it's borrowed into existence. So what advice would you have for people right now? How do you prepare for this giant tsunami? I think it's the biggest in the world because it's global. It's global. Do you know what I mean? It's going Credit Suisse, Deutsche Bank, Bank of Japan. It doesn't get much bigger than that. And China's having trouble too. So
and to think we've only hit the tip of the iceberg. And the reason I'm saying we've only hit the tip of the iceberg, because after all these entities were bailed out, the yield curve is still sending us the exact same message saying, hey, you guys think the Fed solved the problem, but they didn't even understand the problem. So getting back to your original question, though, I can just tell people what I'm doing with my personal portfolio. And I'm not all in cash, but I have the biggest cash position that I've ever had. And I make sure that I've got, 10% gold, physical gold. With the cash position, I'm currently in short term. That's very, very key. Short term treasuries, not in 10-year, not in 30-year, just 1 month, 3 month, very short term treasuries, because those are a liability of the government. They're not a liability of a bank. And if you're worried about the banking system, that's that counterparty risk that I'm trying to avoid. So why am I, then the objective though, Robert, is to have.
1 second. Can we explain counterparty risk? It's like if you have a brother-in-law that's a flake and he's always broke.
Yeah.
And he wants to borrow $100,000 and you lend him $100,000. The counterparty risk is your brother-in-law who's a fake. And that the whole system is built upon, right? I mean, that's what it is, George. And
that's right.
You don't know who's real and who's fake out there, who's strong. So I'd rather just hold it in my own hot little hands than lend it out right now.
Yeah, that's a great point. And the key here for people to understand, in the good news, we've talked about the bad news about money, but let's talk about some good news about money, is that for those who are paying attention, we have this warning system. And it's just like, the people that are paying attention to the tsunami, they have a warning system. And so they can just go ahead and take the advice. They can head for the hills. And then, after it hits, they can be in a good position to go back to the town and buy a lot of that oceanfront property, that real estate, at a very, very low price.
Oh, don't chase the fish.
But just don't chase the fish. Make sure you're up in the hills. That's right. So that's what I'm doing with my portfolio. It's not all in cash, but I have the largest cash position in T-bills and gold. And I'm just waiting for the Fed to start dropping rates, not so I can buy, but I know that that's really when I need to get ready with my watch list, because I'm going to try to do my best to take advantage of the opportunity that this crisis will present. And again, the good news is that the larger the crisis, the larger the opportunity.
Correct. There's one more thing I want to say. There was, that Banda Aceh in Indonesia, was Banda Aceh, and that biggest tsunami hit out there. The thing that was funny was that the humans were running out to catch the fish, and the animals in town were heading for the hills.
Yeah.
I thought, I study all this stuff, but I shouldn't laugh, but it's a human comedy. And the reason I say that is what people do in the investment world. They wait for something to be expensive. Oh, the price of gold is going up. always wait a little bit. It goes up and up and up. Well, the price of real estate is going up, but they wait until the price is high and then they jump in. I hear that, should I jump in now? I said, no, you should have been jumped in a long time ago.
Yeah, they usually wait till the exact wrong time.
At the height
worst
of the
time
market.
to buy. Yeah.
Surfing all the time, they wait until the wave is breaking, then they take off and they get crushed. It happens all the time. So I own Bitcoin, but I waited for it to get to 20,000 and went down to 1,000, 3,000. And I watched it. I just wanted to make sure it was going to hang around. So I picked up 60 Bitcoin at 6,000. And, but I want it to be low. And the average person waits till it's high. That's the difference. That's when I talk about the metaphor of the humans running down to the water to catch the free fish. Meanwhile, in Indonesia, during the Banda Aceh tsunami, the animals were heading for the hills.
Yeah, I think that's a great story. That says a lot.
Yeah, but so right now I'd be heading for the hills. I wouldn't be heading for the free fish.
Exactly, and that's what the bond market is telling you to do.
Exactly. So George, your podcast is The Rebel Capitalist. Are you going to do any more shows on this inverse yield curve story?
Oh yeah. I'm talking about it constantly on the Rebel Capitalist channel, the George Gammon channel. Yeah. I think in macro there is no, there isn't an indicator that's as powerful as the invert. I mean, not even close. It is by far the most powerful indicator in macroeconomics. So we're definitely going to be following it, watching it like a hawk.
Yeah, so please check in with George Gammon, Gammon. It's a Rebel Capitalist. And don't be one of those persons jumping into the water looking for free fish. Be one of the stupid animals heading for the hills right now.
Well said, buddy. Very well said.
So thank you. And we'll be right back.
Thanks for having me on.
Thank you, man. Welcome back. Rich Dad Radio Show, the good news and bad news about money. I want to thank George Gammon. And we also, what do? This show is archived. So if you have friends, family members, or village idiots who are looking for free fish, your cousins or something like that, haven't listened to this show with George Gammon, and you figure out what's going to happen next, because we're in it right now. That's what a 3-day in Scottsdale said. Holy mackerel, we're here right now. Silicon Valley Bank was their first canary in the coal mine. It's here now. Anyway, I thank George Gammon. Thank you all for listening to the Rich Dad Radio Show.
Thank you. This podcast is a presentation of Rich Dad Media Network.